If you have been struggling to understand liquidity in Forex, then this video might completely change the way you look at the market. Most traders think liquidity is only equal highs, equal lows, and stop hunts. But over the years, I discovered that some of the best liquidity setups are hidden in places most traders never pay attention to. These concepts have helped me find cleaner entries, smaller stop losses, and higher probability setups. Now, before we continue, I want to make one thing clear. I never enter a trade simply because I see liquidity. Liquidity only helps me identify where price wants to go, and I also wait for confirmation before taking any trade. That extra layer of confirmation has saved me from countless bad entries. In this video, I will show you 3 ways I personally understand and trade liquidity. We are going to start with my lowest probability setup, then we will move into a stronger setup, and finally, I will show you my favorite liquidity concepts, the one that has produced some of my best sniper entries. So make sure you stay until the end. The first liquidity concept is a high or low that forms very close to an unmitigated point of interest. If you are new to trading, an unmitigated point of interest simply means a zone that price has not returned to since it was created. The market left the area and never came back to react from it. That's why many traders keep an eye on that zones. Now, a point of interest can be fair value gap, a breaker block, an order block, a demand zone, or a supply zone. Personally, I keep things simple. I mainly focus on fresh demand and supply zones. One thing I noticed is that when an obvious high or low forms very close to one of these fresh zones, that high or low can become liquidity. Let me show you an example. Take card CHF. At this point on the chart, we have a fresh supply zone. Notice that the price has not mitigated this zone yet. Now look at the high sitting just below it. It is obvious, right? Almost every trader looking at that chart can see it. And whenever something becomes obvious to the majority of traders, I start paying attention because obvious highs and lows often attract liquidity. Many traders would immediately focus on the supply zones and look for sales, but the market often has a different plan. Instead of dropping immediately, price may first target the liquidity sitting nearby, and that is exactly what happened here. Notice how price pushed higher, took out the liquidity above the high, tapped into the fresh supply zone, and then sold off aggressively. The liquidity acted as inducement. It encouraged traders to commit too early while price was still reaching for its real destination. Now that move looks simple after the fact, but there is something very important you need to pay attention to, because just below the setup, the market printed another fresh supply zone. And this second example reveals something most traders completely overlook when using liquidity around unmitigated zones. Look at another supply zone just below the previous setup. Again, notice something interesting. We have a fresh supply zone that has not been mitigated, and just below it, we have another obvious high. The market is practically drawing attention to that high. Many traders see a strong supply zone and immediately start looking for sell entries. But one thing I have learned is that price does not always move directly from a point of interest. Sometimes it wants to collect liquidity first. And that is exactly why understanding liquidity can improve your timing. In this example, price approached the area and interacted with the liquidity and supply zone. This time, price took the liquidity, mitigated the POI, and still consolidates around it. Sometimes price takes the liquidity aggressively, sometimes it barely touches it, and sometimes it ignores it completely. That is why confirmation is important. Liquidity helps me identify where something interesting may happen. Confirmation helps me decide whether I should actually take the trade. Now, if you need more detailed breakdowns, more chart examples, or free trading signals, make sure you join my trading community. I regularly share setups and explain exactly what I am looking at before entering a trade. Link in description. Now here is the important lesson. A high or low sitting close to a fresh unmitigated point of interest can become liquidity. The market often uses that liquidity before reacting from the zone. It is not my highest probability setup, but it is definitely something I pay attention to whenever I am analyzing the charts. But the next liquidity concept is much stronger. In fact, this is one of the concepts that helped me stop entering too early. And once you understand it, you will start noticing why many traders get trapped before the real move begins. The second way I understand liquidity is after multiple breaks of structure. Notice that I said multiple breaks of structure, not one, more than one. This detail is very important. Many traders know that a break of structure can signal strength, but what many traders do not understand is what often happens after several breaks of structure have already formed. Let me show you an example on GBP card. Here, after multiple breaks of structure, the first retracement often becomes liquidity. And from my experience, the market frequently comes back to take that liquidity before continuing higher. Now think about what this means. Most traders see multiple breaks of structure, they become excited and enter too early. But the market still wants liquidity. So instead of continuing immediately, price made a first retracement and later it came back to take it out. The first retracement is to trap impatient traders. Then once the liquidity has been collected, the real move begins. And that is exactly what happened on GBP card. Notice how the inducement formed very close to the point of interest. This is another detail I pay close attention to. I do not want liquidity sitting far away from my zone. I want it close to the point of interest. That combination makes the setup much more interesting. Price eventually returned, the liquidity was taken, the point of interest was respected, and markets continued in the intended direction. This is one reason I love combining liquidity with demand and supply zones. When both ideas align, the setup becomes much stronger. But again, I do not trade these concepts alone. I want confirmation, and I want the overall story of the market to make sense. If you need more chart examples and live trade breakdown, make sure you join my trading community. Link in description. Now, this setup is already powerful, but the next liquidity concept is my favorite. It is the one that consistently gives me the cleanest entries, and once you understand why it works, you may never look at a change of character the same way again. Now, the setup we just discussed is already powerful, but this last liquidity concept is my favorite. In fact, if you have watched my previous videos, you have probably seen me use it many times. This is the liquidity concept that has produced some of my best sniper entries. And the best part is that once you understand it, you will start seeing it everywhere. This concept is simple. After a change of character, the first retracement is often liquidity. Let me explain. Imagine the market is in a downtrend. Price is creating lower highs and lower lows. Everything looks bearish. Sellers are in control. Then suddenly something changes. Price breaks above a previous lower high and creates a change of character. At that moment, many traders start looking for buying opportunities, and that is where the trap usually begins. Because from my experience, the first retracement after the change of character often acts as liquidity. The market uses it to attract traders before making its real move. The same idea works in reverse. If the market is creating higher highs and higher lows and then forms a bearish change of character, the first retracement often becomes liquidity before the market continues lower. Now let me show you a real example. Take AUD CHF. At this point on the chart, price was clearly bearish. The market was creating lower highs and lower lows. Everything suggested that sellers were still in control. Then we got a change of character. The structure shifted. The market started showing signs that buyers were stepping in. Most traders stopped their analysis there. They see the change of character and immediately begin searching for entries. But I wanted to see something else. I wanted to see where the first retracement would form. And sure enough, the market created one. To many traders, that retracement looked like the perfect entry. But from my experience, the first retracement was actually liquidity. It was inducement. It was the area attracting traders into the market before price reached its real destination. Notice what happened next. Price came back, took out the liquidity, tapped into the demand zone, and then exploded higher. That is the part many traders miss. They understand the change of character, they understand the demand zone, but they completely ignore the liquidity sitting in between. And the liquidity is often what gives you the opportunity to get a much cleaner entry. These are not the only ways I understand liquidity. There are many other concepts I use during my analysis. But if you are trying to build a strong foundation, these are some of the first things I would focus on. Because once you start identifying where liquidity is likely sitting, the market begins to make a lot of more sense. You stop chasing moves, you stop entering too early, and you start understanding why price keeps moving into areas that seems obvious. Remember, liquidity by itself is not a reason to enter a trade. Use it together with market structure, time frame analysis, strong points of interest, and confirmation. That combination is what creates high probability setups. Once you understand that process, you stop reacting to price and start anticipating it. Thank you for watching. If you found value in this video, make sure you subscribe and join my trading community for more chart breakdown, educational content, and free trading signals. I will see you in the next video.